In this presentation, we will take a look at the vendor section within QuickBooks Online. We want to look at the cycle, the accounting cycle related to the vendors. The vendors are people we typically pay to rather than we get payments from, as is the customers, these being the vendors, the payments typically going out. We would call this the vendor cycle or the accounts payable cycle. You might call it the purchases cycle or a billing cycle, the bill cycle. All different names that could relate to the same kind of process with relation to the vendors, the payments going out. Here we are in the free software for Craig's Design and Landscaping, which you can find by going to your browser and typing in QuickBooks Online Test Drive. We're going to be considering the vendor section first, looking at the desktop version so we can see that flowchart. So we're going to be up top in the vendor section this time, a little less detail than we saw in the customer section. Now remember, the vendor section, vendor means basically the people we pay. You can think of a store vendor or something like that. So we're paying to the store vendor. So anything that's going out goes to the vendor. Now, there's usually a lot of different types of vendors, and the groupings that we have in terms of the accounts we use when we pay the vendors, different expense accounts, are usually the biggest type of grouping of expense account types. However, the process of paying the vendors, it has a few less steps. We got a little bit less steps in terms of the process oftentimes. Oftentimes, we would think of us having a bill. We would then get the bill, and then, of course, we would pay the bill at some point in the future. Now, if you're talking about inventory, and we will talk about inventory later, it gets a little bit more complex than this, but for right now, we're going to be breaking down the major components of us just basically getting a bill and paying the bill. So therefore, we're going to have two forms that will be involved in QuickBooks. And you always want to think of these as the data input forms. These are the forms that are going to be driving what's going to happen to the financial statement. So we have the bill first. When you think about the bill, you want to contrast that with the invoice. Think about the two sides of the transaction here. The invoice is what we sent to somebody else. If we were to receive this invoice from somebody else for us, within QuickBooks, it would say invoice on it, right? Because it was an invoice created by someone else in QuickBooks. But to us, it would be a bill. So we would put it in our system as a bill, something that we're going to end up paying in the future. So the bill then, the transaction that's going to be related to it, the journal entry, the accounts that will be affected, will look like this. The expense will typically be going up with a debit, and then the accounts payable will be going up with a credit. Now, we could use the same bill form for other types of transactions that may be affected as well. So if we bought something really large, for example, we wouldn't have an expense. We would have basically property, plant, and equipment would typically be going up. And if we bought something like inventory, then the inventory will be going up. When we get to our practice problem, we'll talk about those type of situations. Right now, we just want to consider the basic example. If you talk about most of the bills that you have, most of the people you pay, vendors, you got the electric bill, the phone bill, supplies, and whatnot. All those types of items you would think about if you were to create a bill for it, increasing the expense going up, the other side going to accounts payable going up. Accounts payable is a liability account, so it's something that we're going to owe something in the future, and therefore basically the bad thing, the liability, would be going up with regards to accounts payable. And then, of course, at some point in the future, we would want to organize those bills and pay the bills. Now, when you use this function, this form of pay bills, it's basically you're writing a check oftentimes when you pay the bill. You're basically going to be generating a check, and you can't generate the check from QuickBooks. But as you generate the check, it'll be a check that's also labeled as the form type of pay bills. And that's going to be useful within QuickBooks because that'll tell us that, hey, this check was written against a bill. It'll tie the bill to the check, and therefore we'll be able to know the transaction, know how that ties out. We'll also be able to sort the bills that we want to pay more easily with the pay bill feature rather than just going straight to the check. So it's going to be a useful resource to have when we select the pay bills and we write checks through the format of pay bills. Then the journal entry will look something like this. The checking account will, of course, go down because now we're writing a check from the checking account. That would be a credit or a decrease to the checking account. And then the accounts payable, the account representing us owing someone else, the bad account, the liability account. We don't like liabilities typically. The liability would be going down, which is like a good thing, right? The bad liability account would then be going down. So the liability representing us owing the vendor money, now we've paid the vendor money, therefore we don't owe the vendor money any longer. Now note, you could just say, well, if I got the utility bill, why wouldn't I just go directly to the right check and just write a check? Why would I put it into the enter bill and then pay bill? that may very well be the case. You may just do that. You may say, hey, for the vendor section, many of the vendors, you might just go directly to the checks and write a check and do a direct kind of payment rather than going through the billing process. It's useful sometimes to go through the billing process because that'll help you to organize the bills. So if you have the bills and you put them into the pay bills function, then you could sort the bills, and it's not like you're just waiting for the bills on your desk and you're like, I'm going to pay that at the end of the month or something like that. You can actually organize, give yourself timers and stuff, not reminders to pay the bill, and be able to sort those bills in an order and then pay them. It can also be useful if you're writing the checks from QuickBooks. I find it easier to enter them as a bill and then use the pay bill feature, because even if you're writing the checks from QuickBooks, you're going to have to buy the checks externally that'll already be formatted. They'll already have the check number on it. You'll have to feed those checks, those pre-printed checks, not a blank piece of paper, but pre-printed checks into the printer and then print them. And you could do that all at once with just writing checks, but I find it to be easier to do, but to use the pay bills feature and then just print multiple checks from the pay bills feature. So those are a couple reasons why you do it in that way. Also, just note that when you enter the bill this way, if you just have a bill sitting on your desk and you don't pay it till the due date at the end of the month, then you're really not entering the bill at the same time period when you could, right? You'd like to have the bill in the system affecting the financial statements at the point in time when the service was done or closer to it. And that could be done if you do the enter bill. So you'd like to take the bill, you'd like to get it into the system as soon as possible, and then pay it as late as possible because you'd like to hold on to your cash as long as possible. So if we go then to the QuickBooks Online, if we go back to QuickBooks Online, we're going to be considering those two forms. We're going to be considering the vendor section. We're mainly focusing in on the expenses and the pay bills, and we'll take a look at the expenses next time.